The following is a paid program. The content is provided by the advertiser. WPSL, its staff, management, and ownership are not responsible for the content. Investment involves risk. Prior to making any investment, an investor should meet suitability requirements. Past results are not necessarily indicative of future performance. Neither the opinions expressed nor the information provided constitutes a recommendation to purchase or provide investment advice. The material presented is not a substitute for obtaining professional advice from a qualified person or firm. Securities offered through Centaurus Financial, member FINRA and SIPC. And now, the host of the Team MARTEK Hour, Joe MARTEK.
You've been on for a half hour.
I know, but nobody pays attention.
Typical Jesuit educated guy.
I'm telling you what, that we can't really hold it against the Jesuits, but we do, because it is
so
all their
easy.
It is all their fault. You know that. 340-1590, 340-1590. I told you why I went to an all-boys Jesuit prep school.
Oh, God, I'm almost afraid.
Don't you remember? No, you don't remember the story?
The deal with your father? Or,
Yeah. What
Oh,
happened?
I do remember.
Yeah, I was going to St. Agatha's, which cost like $50 a year, and to go into U of D high school in Detroit cost $1,500 a year, which is half the price of a brand new Chrysler or Buick. My old man said, "You got to be out of your mind. There's no way in the world I'm going to put that kid in that school." Well, 4 priests showed up at our cottage with my brother and mother gone, and just me and my dad there, and drank my old man under the table. Now, my father respects people that could do 2 things. They could out-cuss him, and they could out-drink him. So I went to this all-boys Jesuit prep school. They probably out-cussed him, too. You know how
Probably.
You know how they are.
Our Monsignor in Los Angeles was great at my elementary school, and this is a 6 o'clock mass during a weekday. And so he just said, "Come on, a little bit more wine, a little bit more wine."
I'm surprised the Jesuits didn't use scotch in the goblets, for the Mass.
Boy.
And, they might have. You never know.
You never know.
They are pretty, for supposedly the most brilliant, educated teaching group in the whole Catholic Church, they kind of set their own rules.
Well, they've got some good colleges.
Yes, they do.
Yeah,
Everybody.
They do.
Oh, yeah.
No doubt about it.
You betcha. Yeah.
340-1590, 340-1590. This is the Team MARTEK Hour, and 2 of the team members are here, original team members. Gregory Fasula, attorney, back in 2004. Dan Warren, independent insurance agent. Greg Fasula, attorney, and Joe MARTEK, financial advisor. I said, "Greg, we're going to start doing radio shows, and I want you to be a part of the group." And Greg says, "Why?" I said, "Well, Greg, because I like you." He says, No. Why do I have to come in?" And I said, "Well, each one of us has a different area of expertise, and people have questions, and you have an area that the other 2 of us do not, so I really think it'd be a good thing for you to be involved." And he says, "Okay, how long do you think we're going to have to do this?" And I says, "Well, probably a couple months."
Yeah.
15 years
15
later.
years later, I'm still wondering why.
See, Greg, you could Skype in. It would just sound like you're in the studio.
Yeah.
Oh, really?
But he
Sure.
wouldn't look as good on the radio that way.
Of course not.
Well, he will.
But you see,
We're working on that.
But we're being YouTubed, so you can.
Oh, and that's going out the window.
What are you going to do?
New cameras, Thanksgiving week.
So we're not YouTubing anymore?
Oh, yeah, we will.
But we have better cameras.
We'll have better cameras.
Hey, you guys are classing up to join. What'd
Yeah.
you do? Did you buy a Pinto and class down so you can afford it?
That's right. You saw the Hupmobile out there.
Hupmobile, right?
A Pinto. They still sell Pintos?
No.
Now, what was that? It begins with a Y. What was
Yugo.
that? Yugo.
Yugo,
Oh, my.
yeah.
It only held like 2 gallons of gas.
Yeah.
And I actually knew a guy that had one, and he used to carry.
No.
Yeah,
Really?
he actually had. I've known one person that had one, and he carried a 2-gallon gas can in the car, because 2 gallons of gas, you never know when you're going to run out. And he said the gas gauge hardly ever worked.
But it probably got good mileage.
Yeah. Well, it had to.
Yeah.
It was called. Why would you have such a thing?
Yeah.
But that was before the EPA and everybody else was concerned about having stuff that was safe.
So did you guys hear that great Tesla police chase
No.
in San Jose the other night?
Mm-mm.
No. What happened?
San Jose cops have Teslas. Well, they're electric.
Yeah, right.
Well, the
right.
car ran out of electricity,
Oh,
and they
wow.
blew the police chase.
See?
Oh, all of a sudden, this policeman's going 100 miles an hour, and the car just kind
And
of
just
slows
dies.
down. It died.
Now, what
It was
town?
great.
They
It was
might-
great video too.
They may have to rethink that
Oh man.
What
as far as police cars.
what town in California was this?
Well, this is up in Silicon Valley. You know,
Right.
and you
Well,
know
that's what I'm saying. You know,
Yeah.
these are crazy people to start with.
But yes, they are.
Well, what was it? Isn't San Francisco now surtaxing electric vehicles because their road tax has gone down so much because people are buying so many electric vehicles, they're losing all kinds of money.
Well, I'm not surprised.
Yeah.
Yeah, I'm not surprised.
Yeah. Hey,
Yes.
if it happens in California, it's not a surprise.
Well, and
Well-
you know, and it's and believe me, it's gonna
Yeah.
move east.
It's gonna. Yeah.
I mean, you know, what starts
California
in
is
California
ahead of us.
Well,
Yeah.
you know,
There's no
nobody's against electric cars. Nobody's
No.
against hybrids. It's
No.
all a good idea.
It has to be done.
And I got a buddy of mine that has a Tesla. He loves the thing.
Oh yeah.
I said, have you done the conversion to figure out what it costs to drive it, meaning as opposed to gas? And he says, I did the conversion based on the electric bill, and in effect, let's say that it was costing me $2.50 for a gallon of gas. You know, and convert that to mileage. It's now 75 cents a gallon.
Whoa.
So his electric consumption is about a third of the gas consumption for the same amount of miles.
Wow.
So now, doesn't that justify a $75,000 car?
Well, they all are now, though.
Well, no.
I mean, you know, let's get real. They're all getting up there.
well,
But
yeah,
the
but
more,
there's
the
still a
more
lot.
mass produced they're going to be, the more affordable I would think they'd be.
There's a lot of cars under 20 grand still.
Now Lexus
No,
is junking electric.
Oh really?
Toyota. Yeah.
not a good one.
Really?
No,
The
they're
Prius?
They're getting
not junking the
they're,
Prius.
they're getting rid of electric, and they really want this hydrogen thing to work because
Well,
there's no pollution.
Well, guess what? Who doesn't want the hydrogen thing to work? Everybody does. You know,
Except for rear end collisions.
well,
That's
a little
the
minor.
problem.
Well,
It just-
that's why they got rid of Pintos.
Yeah, that's right.
You remember that?
Yeah, I do.
Gas tank sat right in the back,
Yes,
so
sir.
you could nail
Oh,
it.
yeah.
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 Anyway, so Dan Warren, independent insurance agent, big word independent. Dan's, by the way, on his way.
Oh, is
He
he?
called in
Oh,
twice,
okay.
hung up once, and then called in again. And
Hung up
said,
again?
I'm running 15 minutes late, now 20 because I can't get through to you. So it's worked unbelievably well. And in fact, Greg, I can't tell you, we take so many things for granted that we do, and we've been doing for years and years and years. So I had it happen again. A very sophisticated, intelligent couple, retired military, major in the military, working for the government. Explain wills and trusts to me. I mean,
Yeah.
literally, explain to me what the difference is.
Yeah,
You know, and we take that for granted.
we do. Yeah.
And then here it happened again. He says, well, I see these ads, and I got these people want me to come in and get a trust.
Yeah.
He said, and they want $2,500 or $3,000, et cetera. And he says,
If
"Sounds-
you're lucky, it's that low.
well, it
Yeah.
depends. If you really need a trust, it can cost a lot more than that.
If you really need a trust, I mean, and a lot of times it just comes down to what you own. You
Yeah.
know, whether you have probatable assets or not.
Well, he didn't have one probatable asset.
Yeah. Right.
So I
Right.
went through detail, and I've done this again.
Mm-hmm.
I bet you I do it twice a week for people, going through the difference between probatable, and let's just do it. Let's just do it right now. Why do I have a trust? A trust is to avoid probate. Really,
Correct.
that's it.
Yep.
People say, well, what about, you know, corporations and LLCs and all that stuff? Doesn't that avoid lawsuit? And I said, not really. Most of those things are
No.
penetrated today because if you're a small business person,
It doesn't protect.
it
those
doesn't
type of
protect. Now, if you're
assets.
General Motors or a great big publicly traded company, that corporate veil can protect people. That's an easy one.
Yeah.
So now the people say, what's the difference between a will and a trust? Let's hear it from the legal version, then I'll interpret after he gets done with all the four little syllable words.
Well, I mean, they both do the same thing as far as distributing out assets when you know the person passes away that made the document. But the big difference is whether it needs to go through court as far as probatable assets. And certain assets do need to go through court. If you have like investment properties or any type of asset with your name on it only, that would have to go through court, because there's got to be a way for that asset to be to change from your name
Stay
to
with
the
that
name
last
of
subject
your
where you just said
beneficiary.
your name only. Give an example. Your name only.
Well, I own a investment property that I rent out in my name only.
Right. Okay. Now that should be in a trust.
It should be, yeah.
Now what happens if it's not in a trust? You leave it in a will, that investment property, that goes through probate.
Would have to go through court,
Right.
yeah.
Now the court process takes, let's say, normally about 6 months if everything goes well.
Yeah, or less.
It could be a little less.
Mhm.
If your illegitimate son, Joe MARTEK, shows up and wants a piece of the action, it could take a year or two or longer.
Could take a while.
I think Howard Hughes' estate is still not settled. And most of the old people don't even know who Howard Hughes is. That's been so many years, 70 years ago now. But the key thing happens, and I teach this constantly, I said, make sure when you go to your bank, you tell the bank, I've got a checking account, a savings account, and a CD. Do I have TOD on each one of those? Transfer on death. Most bankers do this now automatically when you open.
They usually ask you when they do the account.
But let's say
What
you
do
have
you
an
want
account
in
that's
it?
20 years old.
Yeah.
It may not be. So you need to ask them, why do you put that on there? It's not subject to probate. Once you name somebody, TOD. Got
Can
it?
you have a contingent beneficiary? Let's suppose you and your spouse are driving down the road, get in a wreck, both get killed simultaneously, so you can't transfer it to your spouse.
I
The
usually-
dog gets it all.
As far
No,
as I know, you
I have a
can.
client that a parrot got it all,
Yeah,
all of his
yeah.
assets.
Yeah, sure.
Not abnormal. They
Come
got-
on.
No.
I'm serious.
Dan.
He was
Remember
he
they-
was a doctor, had no family, these were his children, and these parrots are going to live a long time.
Some of those parents
Yeah.
live 70 years.
They do.
You know, listen, they got that commercial on TV. I think it's Geico, and it shows the dogs in the yacht going by, and the waiter is looking at the dog saying, look at me. I'm working. Those dogs are living like kings out there.
I'm working like a dog.
Working like a dog. Anyways.
But probate is probably the main consideration with trust.
Right.
I'm seeing cases where the person did a trust and they probably shouldn't have.
No kidding.
Because of, just for one thing, like family dynamics, where if you have like stepmother or stepfather and you have step siblings involved, it can get real messy. So, I mean, if you have a situation where you have, you have your children who are all natural children, and they all get along, and you're okay with one person handling the assets when you die, that's a different situation. But sometimes I think it's even better. It's better to go through court, to have that court process where everything's being overseen.
Families can fall apart like crazy.
They can get
Well,
really
let
messy.
me ask you this. Let's suppose I want to rule from the grave, as we like to say,
Yeah,
and I
yeah.
put in my will, hey, you contest it, you're out.
Yes.
Can I do that?
Ooh.
Of course.
You can, but
You
it won't
can,
work.
But that can be contested.
What do you mean it
Yeah,
won't work? That's
it
my
is,
last
yeah.
will and testament.
Well, that can be contested also, yeah.
Yeah, it won't hold up in Florida.
Oh,
Really?
really?
Okay,
It will
why?
not.
Okay, why?
I don't know. I don't know
Judges
the
don't like
reasoning.
that.
It just won't. You can't say that you can't contest it. If
Could
there's
I then
grounds
say,
to
if you
contest,
contest
can
it, you only
contest.
get $1, so I'm not cutting you out? Could I be that sneaky?
No, I've heard that in different states where they do that, but
I know there's
Florida,
a thing
it doesn't
called
really
dower
matter.
rights where you can't not give your spouse anything.
Correct.
But how
Yeah.
about children? Do they have any rights?
not really. I mean, you have rights to intentionally not include children if you want. I mean, that's why you do a will. That's why you do a trust. That's
you
not
can-
a reason to contest.
No, the key thing, listen, I'm a John Grisham big reader, the attorney that writes every book in the world, and one of my favorite ones is The Testament. Did you read that book ever?
No,
Yeah.
no.
Anyway, old guy, 80-some years old, multi-billionaire, got 6 kids, and all of them hate him, and he hates all of them, and he's been married as many times as me, and he gets everybody all together because he's going to die. Everybody thinks he has cancer, so he does a will and shows everybody is there doing the will, and he actually signs it in front of everybody, and then he has 3 psychiatrists in there attesting to the fact that he's got all his marbles together, right?
Mm-hmm.
So then what's he do? Everybody leaves, and he goes and jumps out the window and falls 20 stories and kills himself.
Oh, God.
Well, what he did is he signed that will that was real thick and gave all the money to his kids, Mickey Mouse. And then he hand wrote holographic will on what states those can hold up in. Forget the book. This may not be a legal
Yeah,
thing.
it sounds like a Grisham book.
But he said he would pay off all the debts for the existing kids up to that day.
Mm-hmm.
And if they contested the will, they got nothing. And then he left all the money to an illegitimate child.
Oh.
So that's the beginning of the book. That's in the first 5 pages.
Oh, man.
Yeah, I wonder.
So we know he didn't live in Florida because according to Greg, that won't hold up.
That won't hold up in
Right.
Florida.
And I wonder about his competency if he does his will and jumps out
Well,
the window.
that's why they had 3 psychiatrists there
Yeah,
interviewing
but he
him.
jumps out the window? Or,
Well, you know,
I mean,
listen,
you can pay a
just because you
psychiatrist
kill
to do
yourself.
just about anything.
No, but he wasn't. They were hired by the families.
Mm-hmm.
You see, not by him.
Oh,
They said,
yeah.
bring in whoever you want.
Oh, okay.
And
That makes more sense.
Oh, yeah. I mean, the guy had it covered. And they said, how can he be sane if he jumped out the window? And I says, hey,
Right.
there's many times I wanted to jump out a window, but in Florida they're only 1 story high. It didn't do me any good. 340-1590, 340-1590. So, Dan, I was telling a story how we all got together and how we had to kind of hog-tie Greg to make him show up for the shows. And he thought we were only going to last a couple months at most. And
Well, you know, it takes a lot of
months.
time out of your day.
yeah, right.
You gotta get here, it takes a while, then you
Yep.
and then you gotta get back. So it's a good half a day.
Yeah, half a day.
You know,
Well, and then if you guys did both shows,
well, it's just
It's a whole day.
it's a whole day.
it's a whole day.
And I'm actually meeting a client in between.
Good
Well,
for you.
Good for you.
Good for
I had to meet a client before I came. That's why I
See?
was running a little late.
Hey, I was talking about this last week, going through again for the 90th or 1,000th time about will and trust, and where you and I see these ads in the paper, and we know some of your competitors, they only want to sell you a trust, and they make it out like if you don't have one, you're going straight to hell in a handcart, and your family all gets screwed. Nobody gets anything.
Yeah, and they're at Outback, too.
Yeah,
No.
yeah. I mean, and I look at it, and then this one from Michigan. Did they call you? Do you remember?
No, I don't
They
think
moved
so.
here
Michigan?
from Monroe, Michigan, and I said to mention that to Greg when you talk to them. They're supposed to call you.
Does not ring a bell.
So they had a trust up north, and I'm talking to them, and this is on CNO, and he said, well, we have this trust, and I says, well, what do you have that's in your trust? And he goes, we don't know. Well, typical, was not funded, nothing was in it. So I said, what do you own? So we went through everything he owned, and I said, you don't need a trust.
Yeah.
I said, you need to call Greg, get a Florida will done. Now, what happens that a lot of people don't realize, when you do a will or a trust, that's not the only document.
No. Do you think that they
Well-
got it because their neighbor said they should get it?
No,
Yeah.
I think because they saw a free lunch or something up in Michigan, you know, and that's what happens here. Hey, come
Yeah,
get a free.
Golden Corral.
Yeah, yeah.
That's
Well,
right.
Which is really good. I mean, to get educated, but you know, a lot of times you're going to get heavy on the trust as far as
That's what. Hey, that's where they're going to make a long dollar.
they're going to give all the advantages of the trust and
and
they're
get a
not
nice
gonna
book stamped with gold.
Yeah, you're not going to get individual guidance.
You may get more than you need.
More than you need.
More than you need.
Well, the key thing I was talking about was transfer on death. Like if you have an IRA or any retirement account, there's no probate. You have named beneficiaries. Dan mentioned it already. You name, like say, a spouse as a beneficiary, but then you have contingent, which would be children or the parent or who cares who. You can name whatever you want. And I've got some that have 8 and 10 people listed as beneficiaries in certain order. You can do anything you want.
But if you do nothing,
If
that's where the state steps in and charges you for you not doing anything.
Well, then attorneys really get happy because now it has to go through the court system. And when you have now these stepchildren and multiple families all in one piece, boy, all of a sudden the lawsuits start. You know, the attorneys start rubbing their hands together because 2 years later they sucked up $1 million in fees.
That's
Yeah,
why Greg
well-
is driving his Rolls Royce now.
That's the American way.
Exactly. I mean,
Hey, I have a question that's kind of close to that on when you were talking about stepkids and stepmoms and all that. I have a client, he's elderly, and I was talking to him, and he goes, you know, I was married long ago, and when I got divorced, I had to pay my wife alimony. He goes, now, she's been married 4 times since then.
Oh, boy.
Here's where the neighbor steps in. He goes, my neighbor said if she got remarried, I shouldn't have had to pay that, but I've been paying for 40 years. I go, well,
Are you serious?
Oh, I'm serious. He goes, was that true? And I go, well, in many cases, it might be true. I said, you're better off talking to an attorney. What would you think on something like that?
Well, he's not too bright.
He's not asking for the money back. He just says, I'm elderly. That $400 a month would help me out a lot right now. I didn't mind paying her when I was working, but she's had 4 husbands. I don't think I should still be paying her.
$5,000 a year for 40 years. That's only $200,000. That's not bad, Dan.
No.
It doesn't sound like he should be. But
gonna
why
have him-
didn't he go? He should have.
Because he was busy working and living life and was happy and said,
Yeah.
you know, I'm just.
If he wanted to voluntarily give it
so
to her,
in this
she'll
case,
probably accept it.
maybe the neighbor may have given him good advice.
Well, you know what happens is
They're only
that's
married
kind
a
of
year and
common
a half.
sense.
Oh.
You know,
being ignorant means you just haven't learned.
Well, I understand. Yeah.
That's all. You don't. You know, there's no way you know all this stuff until you find out. Sometimes the hard way. Me and my $30,000 dog. I mean, that was.
I mean, evidently he didn't care. I mean, he wanted to. He just made the payments.
And you're probably right. It was his wife. They were married for like 20 years. That's why he got hit with that. And he goes, but now I'm in my late 70s, and that little bit of money would go a long way for me. Do I still got to keep paying her? I go, well, I don't know.
I'll tell you what.
He needs to go to court and get that modified.
I'm going to send him your way.
It may have already said in there that if upon remarriage the alimony stops.
could,
And
yeah.
he
A lot
may
of
not
times
have,
it
he
says
might not have
that.
read
Yeah, a
his,
lot of times
his
it
divorce
says that.
decree
It could.
if he could even find it.
Because I've always been told that's why they don't get remarried. They just get the alimony and
Right.
get a new.
Hey, I had
hubby.
one.
It's like that in California.
Of course.
It's spelled out.
It's well,
Yeah.
I had our buddy Bulldog. Some 6 months ago, he was married a long time ago. Had a pension account with a former employer that had to stay there. He couldn't move it. And I said to him, I said, by the way, you were married when you did that. And he goes, yeah. And I said, who's the beneficiary? He says, you know, I don't know. I said, well, let's find out. And it still was his ex-wife. Well, Mary Beth was happy that I showed up because now he can go ahead and die and she's going to get some money.
That's right.
But the key is you got to be careful of these things, like
Yeah,
a life
well.
insurance contract. You
You
have
do
one with an
understand.
ex-wife as a beneficiary.
So would she actually, had he...
yeah, she
Oh,
would have got
absolutely,
it.
she'd get it.
Oh, absolutely.
You could disinherit your natural children if you're not careful. You get remarried, and if you don't do
Wow.
it right, your estate's going to go to your new wife, and then if she dies, it's going to go to her kids.
Yeah. And I've seen cases where people did have natural children from years ago, and they died without a will, and now they have stepchildren who basically they've raised.
Right.
Guess who's the beneficiary?
Yeah.
It's the old
Wow.
the original kids, not the stepkids.
We had one. A lady that lived down in Palm Beach County, that her husband, very good people, but he went out and bought lots of rental properties over the years, and probably a lot of these deals were not even financed. People would carry the paper, and he would, do them. They were all in his name, not in her name, not husband and wife. So he dies. There were stepchildren. She was allowed dower rights on these things, but then it went to his estate, and the kids, her stepkids, not her children, they got the lion's share of all those properties.
Wow.
Yeah.
But bottom line is, if you don't, it's a lot. Isn't that a weirdest? Greg, I think it's because you wear that attorney label on your head. People automatically think you're an intimidator or you're going to gouge them or something. Automatic. And quite honestly, let me just pat Greg Fasula on the back. And I don't do this very often because he doesn't deserve it that often. But way back when I first started doing this, client would not have a will or a trust, and I'd go interview a local attorney who would talk real nice to me, and we'd be good buddy-buddy. Then I'd bring my client in to see him, and all of a sudden he'd turn into a Banshee Indian, real prima donna, gonna gouge these people. So then I met Greg 20-some years ago, and Greg was, to put it mildly, fair. That's not the word that I used to use, but that was it.
Okay.
And what Greg didn't do, he didn't have stuff you could weigh. He actually did only, let's say, meat. No potatoes, no salad, no nothing. His documents were precise. Well, some people do 100 pages. Greg would do in 5 or 10 pages. Same concept. So the concept
He'd
was...
save a tree.
Save a tree.
The second part of it was Greg listened to the people when they were there. I'm telling you, not many attorneys are good listeners. They tell you
They tell you what you want.
what you're...
What
this
they
is
want.
What you should
This is
have.
what you should have,
Exactly.
period.
But you know, Joe, all that's good. But if he's not competent, I'm not going to go. So
But that's
for me,
you.
Right,
for
right.
me, I look for competency, and that's why I
Right.
send him to Greg.
Right.
All those other things are
Right.
good personality
Right,
traits.
right.
But I want to make sure that if I'm sending somebody to an attorney, that he is competent. They'll be pleasantly surprised when they
Yeah.
meet his personality.
Yeah.
That's
And
the
Greg
bottom
did
line.
not go to Sears Law.
No.
You went to Roebuck Law, right?
No, I didn't
Roebuck
go to Sears
Get
and
a,
Roebuck Law.
get a buck. Get a buck law.
Roll Tide, roll
University of
Tide.
Alabama.
Hey, that's one of the best law schools in the country.
It is.
Yeah, yeah.
Especially
anybody-
state schools. It's one of the best.
340-1590, 340-1590. Then after the three of us started doing the shows, the Great Recession hit, and all of a sudden words like real estate and mortgages and financing became monster subjects. So we had Ms. Victoria Lloyd, Remax of Stewart, hardest working realtor alive, most credible. If she says she's going to do something, you can just take it to the bank. Woman,
Has she shown up in the last 10 years?
Yeah, she was here last week. You weren't here.
Yeah, she was here.
Yeah, you
I was here.
But you couldn't tell.
What does that mean?
Carol has mentioned that several times.
I noticed. I thought that was an easy setup for you, Greg. So then that brought Mike Paulus in, which is a mortgage broker, and it just happened to me last week. Bartender says, I got a friend of mine who gets me a mortgage, and he told me all these stories, and I said to this guy, that's a friend of yours. And he goes, yeah, oh yeah, he's doing extra special this, and I'm getting a special deal. He said, but I saw this ad for 3 7/8, and I'm paying 4 1/2. And I said, you need to call Mike. I said, your buddy, your quote friend, MARTEK, I'm real subtle. I said, he's lying to you. He had stories that were against the law. And
Things you couldn't.
What
do.
are friends for?
what are friends for? So and you hear this constantly. And bottom line was, he's no longer has that friend.
Well, you might be able to get a really good note. I mean, my eye has caught notes as low as 2.75.
Yeah, right.
But I
Wow.
haven't gone in to see what are the closing costs.
Yeah.
All
Oh, yeah.
these points I may have
Sure,
to pay.
sure.
So
Right, the
sometimes when you
points.
see those notes, you're just buying the note down.
And that's a fact.
Exactly.
And you literally can do that, but if you're not represented, that's called not right.
Right.
So
They're hooking you with the number
With the number.
2.75,
Right.
getting you in the door, and then they're trying to hammer you with the bottom line when it's
Yeah.
and
Sure,
what
your
I got to
closing
have
cost.
Yeah.
$15,000
Yeah,
or $20,000.
And
Well,
some
that's
people
not what
don't
I
even
want.
realize that.
No, they don't.
When
Well,
they
you know,
find out the details.
Then they say, "Don't worry, we'll roll that in the note."
Yeah, exactly. Okay.
I had a
Sounds
lady
good.
down in Coral Springs that's a client of mine that called me up. She said, I refinanced my house. And I said, really? I said, you get a good deal? She goes, I don't know. And I said, well, do you have your closing statement there? And she goes, yes. I said, well, read me off these different things. 9 points origination.
Oh my goodness!
Woo!
So
Ouch.
I said,
Ooh.
give me their name and phone number right now. And I called them up, and I said, that is canceled. You got a 3-day right of rescission. It's going to be canceled. We're sending you a certified letter overnight. And you'll have it tomorrow. Cancel that, and we'll start over again.
Doesn't even sound legal. 9 points.
Well,
It's
any-
legal if you sign it.
You know, point became then,
Now, how old is this lady?
well, she's in her 70s. But you see, even if
So
she'd been...
there's like elder protection on this stuff, too. You know?
Here's what happened. This was at the very least immoral.
I
At
think
the-
we all qualify for that now. Don't we?
Everybody in this room qualifies for that.
except for Greg.
Are you
Yeah, I'm
fi-
getting there.
You're 50 yet?
Of course I'm 50.
You look older than that. I just gonna say. Anyway, so what happened is I called him up and he says, I don't want to cancel. And I said, well, I understand that, but there's no way. And he said, what do you want? And I said, I want you to give her back 8 points. Get 1. And he said, okay, I'll mail her a check. And I said, no, you hand deliver a cashier's check today. And they did.
Because the clock is ticking.
The clock is ticking. She had 3 days to cancel it.
Oh, and they did it?
And
Oh
they
yeah,
did
oh
it.
yeah, yeah.
Ooh.
Oh, yeah. Yeah.
That's interesting.
Yeah. Well, it's like, let's suppose you have a 5 or 6% note and somebody talks you into refinancing. You may be so far into that note and it's all going towards principal now that
It may not be
refinancing
worthwhile.
may be a bad thing for you.
You just don't know. You have to put the whole thing together and ask the questions. And that's what we try to do, is educate everybody in our group. That's the whole game plan. 340-1590, 340-1590. Michael, Joe Martek, you're on the radio.
Hey, Joe Martek, Mike here from East Coast Mortgage Lenders.
I've never heard of you before. Since when did you become Michael? All of a sudden you got a long name here. She even spelled it right.
I'm trying to be fancy.
Fancy.
Michael, well, hey, listen, I'm going to start going by Harold Francis Jr. then, you know. Nobody will know who I am.
No one will know you.
Isn't it funny you mentioned about the nine points on that, and he called right away?
Yeah, but
Is there some correlation there?
You think?
Mike's trying to get 9 points, out of me all the time, But what is it? Points of light, Mike.
That's right.
Well,
But it's funny you're talking about interest rates because it's to consider refinancing. I mean, what a difference a year makes. If you go back to last year, we were into the last quarter with 3 rates from the Fed.
Increases, right?
Yeah, and the 10-year T-bill was 0.25. The 30-year fixed at 5.25. Ahead in the year, we've just had 2 rate decreases from the Fed. The 10 trading at 1 point interest rates.
I like the way the phone is working.
Yeah, Mike, you're set. Are you on a Sports Illustrated phone or something?
Because every 20th
Football phone.
every 20th word is gone, and the words that you were trying.
Oh, yeah.
Yeah, you're cutting in
What
and
I'm
out.
doing, I have a web phone, and I'm live.
Guess what?
think you're live.
You think you're live. I think
half live.
I think you died because you should. I like your
Are you
conversation
sure
better.
you're not on your boat? That's what it really sounds
Really,
like. You're on your
I
boat.
hear the waves lapping.
You caught me now. So. No, I was streaming your line, and I have a voice over IP phone system. So you're streaming a lot, and then you're
You're skipping every 20th
Better
word.
call that phone guy
You
back.
better call that guy back. I think you got something with no loving.
Well, I don't know. Maybe the internet is acting like it should today.
Something is definitely. It's
No,
like
it should be better now.
what'd you do?
He got off of it.
You turned off.
I stopped streaming the show.
Oh,
bingo.
hey, you know what?
Oh, okay. It was feeding back.
It was feeding.
on it.
Is that right?
Yeah.
Well, you
Okay,
see,
now I get it.
yeah,
Okay.
our owner's husband here finally figured out what's happening here on our show. But that's okay.
All right, well, I'm glad we got all the technical issues straightened out.
You're not supposed to watch us and talk to us. That doesn't work.
It doesn't work. Hey, Mike. Speaking of which, Dan brought it up today. This client of mine that had got taken advantage of this many years ago. Are there laws today that protect the consumer on how many points or origination fees, et cetera, guys like you can charge?
Yes, and 3 laws. There's high cost testing, so, and you could still make those kind of loans if they're not illegal, but they have to be properly
Disclosed.
them up front.
But a lot of times people sign pieces of paper, they have no clue what
They say
sign.
sign here at the X, sign here at the X, sign here at
I
the
mean,
X.
you go to a closing and it's 25 signatures or 30.
I've done that.
Yeah.
Oh, yeah.
I mean,
yeah.
And
It's hard to do nowadays because there are, if you're dealing with a mortgage broker, there's compensation laws that are in place. You have to make the same amount of money as a percentage on just about it.
is that the way the laws work now? If
That's the way they are now.
if somebody
It was
gouges
the
somebody,
Wild West back then.
yeah, okay, fine. Because
Sort of like a consent to rate form in my industry where we can charge over our state filed rates if you sign a form that consents that you know what we're doing and you're agreeing to let us charge you more.
well, it's no
You can
different.
pretty much agree to anything,
Well, once you agree to it, and then, like people said, they
So,
want.
Dan, are you talking about redlining?
No. After Andrew hit, a lot of the companies shut down, and they were trying to get rate increases and they couldn't. So there's always been a thing called a consent to rate.
Gotcha.
And I would go to the client and say, here's our state file rate is $20,000 for your building. It's going to be $25,000. You have to agree to that.
Yeah, you did the increase.
And that's when they pick up the phone and call another.
Well, yeah.
No, because back then you couldn't find it.
Well, even though if you could, Mike, when it comes to competition, we all know that. But here comes, like the fellow that I was telling you about last week that somebody was telling him a whole crock of stuff. And by the way, he did not call you. He went to a bank. So we'll see what happens to him when he gets done with the bank, who gave him a better rate.
I know we had a caller last week where the national lender, I don't want to mention who it was, but, immediately charged his credit card for 2 appraisals because he was financing 2 properties, and then they turned around and declined them.
Ooh.
That's not the way that we work. What we do is we get you spend your money.
Yeah, before you spend the money. Yeah. Well, you see, and what they did was not illegal or improper. It might be immoral, but
It's
that is
fraud.
it's the banking system. But they have these steps: 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. You go through the steps. Forget.
Yeah, and
But taking my money
go
should be the
through
last
those
step.
proper steps.
Yeah.
Good thing.
Yeah, imagine if you didn't go through those steps and then you decline somebody.
Yeah.
And then somebody cries foul.
Yeah. Hey, listen, it's a situation that when I look at and I see, like the fellow that I was talking to, that his lender was telling him stories that had nothing to do with reality to make himself look good, that he was going to get a friends and family deal, which is better than the guy on the street.
Hey, sweetheart.
Fortunately, with the compensation laws, you really can't do that.
Well-
Real quick, I just wanted to touch on one quick thing. Interest rates compared to last year are 1.5% lower. If you equate that to qualifying ability, if you're doing a mortgage for make $30,000, so $60,000 with a $5,000.
Whoa, Mike,
you are falling off here.
We got like now it's like every 5th word is out.
Oh, gotcha. Well, I'll continue this conversation in the afternoon show on that other channel.
You'll use it. Use it.
In person. If you were here in person, we wouldn't have that problem.
Mike, you can drive up to Fort Pierce occasionally. I know that car of yours, that Pinto, can't go that far, but
Either that or call on Skype. You're good.
Hey, Miguel, talk to me later. Thanks.
Take care. Bye-bye.
Bye.
Hopefully he doesn't have Comcast. Oh, man.
340-1590, 340-1590.
Welcome to the world
Well,
of digital.
what he was alluding to, which if you have an 800, say, credit score, and you're going to get an 80% loan or better, normally you can get the super best deal there is.
And you should, because you earned it.
You've earned it.
You've earned it. But if you're all of a sudden, let's say you're 650 or 625, which is not bad, it's just not good, and you're going to get a 90% loan or a 95.
If it's not good, it's bad.
Well, that's how it's not as good. You can still get financed, but
Yes,
you're going
that's
you're going to pay more. Lenders look at it and just say, hey, the best get the best, and nothing new in life there, unless you're a politician.
But see,
of course,
Mike
they all get it.
Mike would look at it and he would say, hey, if you do these 2 or 3 little things, bump it up, and then we'll go ahead and try to get it. Doesn't that make more sense?
You see what Dan is saying, like, let's say you've got some credit card debt and you owe $3,000 on a credit card, but if you paid that off, you can move your credit score up 10 or 20 points. Well, he
that might
say,
be enough.
and literally,
Pay off in the
all of a
long run.
sudden, you get a much better deal. Then after you pay it off, you can go back and run it back up
Run it
again
back up.
if you want. But the bottom line is, in order to qualify, lenders want to see you very responsible. Like my daughter and her husband, they make this unbelievable fortune. They make a ton of money. But they may go 3 months, 4 months without making a dime, and then all of a sudden they'll get a $600,000 or $700,000 commission. So she's got these $100,000 credit card limits, and she'll run them up. So they went to buy a new house and get financed and got turned down because her ratio,
Debt to earning
her
rate.
debt to earning ratio. Yeah. So she
That
had,
will get you.
yeah, and literally, their credit score was superb until all of a sudden their credit cards were loaded. They had a big commission coming, but they had to wait a month to pay off all that stuff. So all of a sudden they were good looking again.
But then you wait.
Yeah, you wait.
You wait.
So Mike would counsel you like that, and he'll run across. And I have a hard time sometimes with people. They rather listen to the next door neighbor than to some of us that have been in the business for 20 and 30 and 40 years and have had the direct experience with what to do. Neighbors always know more than professionals. We know that.
Neighbors are free.
Yeah.
Free advice.
Well, I mean, on the debt to earnings ratio, there are times when we'll deal with a lender, Mike or any other lender, and they'll say, this is where we need to be to get them qualified on the debt to earnings ratio.
Right.
So there may be some bells and whistles on that policy that we would normally add.
Yeah.
That we don't, and we sit down with the client and say, this is what it does not include. And as soon as you close,
we can add it back.
You need to come back and add it back.
Well, you had literally saved. If Mike was still on the phone, he would say, "Hey, here we go to closing," and all of a sudden, the cost for the homeowner's insurance knocked him out of the ratio because the cost was $1,000 a year too high. So then they called Dan in a panic, and Dan says, "Okay, we'll write the policy, but like you're saying to the client, you may not have all the bells and whistles you need, but come back in after closing, and we'll add the."
It'll be what the bank is looking for.
Of course.
There's a difference between what the bank is looking for and what I would want you as my client to have, because there's all kinds of little things that can happen that I would want you covered for.
And wouldn't the bank, I don't get this, wouldn't the bank want you to have all of that?
They do not.
Bank is only concerned about their loan. They're not concerned about your life or your lifestyle or your family.
They so much don't care about you that if you let your insurance lapse and they put force-placed insurance on it, which they will, it won't cover the value of your home, just the loan. It won't give you.
And it'll cost you twice as much.
It'll give you no liability coverage. It'll give you no contents because the bank doesn't care about that.
They can always get the house back.
They can always get the house back.
Whoa.
So, I mean, literally.
I never even thought about
Well,
that.
think about the logic. If it's your money and you loan me the money, you want to make sure I pay you. And if I have an excuse for not paying you, you just say, hey, what can we cut out that you don't pay but pay me?
Wow. Okay.
I mean, literally,
Yeah.
banks in first position, they got to protect their butt. And they have owners, stock owners, et cetera. So they have a responsibility to the owners to do the best job they can for the bank. Now, hey, any company that's a publicly traded company has a responsibility to its owners to do the best job they can for its owners.
And they walk a fine line. I mean, let's suppose that you're the lender and the guy is going from company A to company B. All right, but he just hasn't quite got done to it.
Right.
But now the hurricane comes and he can't.
That's right.
He can't because either
You're in the box.
You're in the box. Is the bank in a position where it should instantly put coverage on you? They don't even think about that. Your house could get destroyed and have no coverage.
Yeah. And the bank would be covered, but not you.
Not you.
And Dan, if I'm not mistaken, single purpose coverage, bank coverage, is much more expensive.
It can be 4 or 5. In fact, I had a client that had that done on a car. They didn't have the comp and collision that they said they were going to have. The bank came back with about a $4,000 fee at the end of the loan saying you didn't have coverage during this period of time. Now, let's face it, you can't go back in time and have a claim. But the bank wanted to go back in time and charge you for not having it. So I gave the client a piece of paper with our quote that showed how much we would have charged for that period of time. I said, add 10% to that and tell them this is free money. I can't go back in time and have a claim 3 years ago when I didn't have coverage.
Right.
I'll give you what it would cost me plus 10%. If you don't accept that, we're going to go to the state insurance commissioner and file a grievance.
There you go.
And they accepted that.
Sure. 340-1590, 340-1590. I had a lady in just a couple days ago, her and her daughter, and I'm going to skip the name of the company, but it was a captive company, and they had the car and the house together on one policy.
All bundled.
Bundled up.
Yeah, and she has a 10-year-old car costing $2,500 a year for full coverage with $50,000 worth of liability added to this great homeowners policy. And she said, isn't that kind of high? I said, well, you have to have a quote because it's bundled and you get the discount. Well, she let it go, but it kind of ate at her. It just seemed like it was too much money for a 10-year-old car.
Well, sometimes bundling makes sense.
Yeah.
sometimes the discounts you get for bundling is so small, it doesn't matter. So let's suppose you had a bundle and you thought your car was too much. And so you took your car and you moved it to another company, and your home now went up because it didn't have the bundle. So let's say it went up by $100, but I saved you $600 on your car. It's a better deal for you.
What she had not done was that step. So back again. We were talking, Greg, earlier about C&O and Longworth and about selling on. We educate. Everything we do, the three of us and everybody in our group, is to try to teach people what they can do on their own, whether they deal with us or they deal with somebody else. The concept is, and we've been very, very successful at educating people for the last 15 years, Greg. 15.
Yes, I know.
Are you dyeing your hair?
Of course not.
I mean, how come you don't have gray hair yet? You pull them out?
He's not as old as you are.
We got three white-headed guys in here.
Oh, man, here we go.
340-1590, 340-1590. So, other than that, Dan, is there anything new in the insurance business these days?
Well, I mean, a lot of people are under the misconception that we're not writing because of the proximity of storms, but our markets are open. There's no problem getting homeowners insurance. The only thing that I personally have new on the horizon is I'm in the process of interviewing a company for a new product, and I mentioned it last week where, I believe that long-term health care is a good thing for most people. Most people are going to eventually need it. The problem that I've seen with it is it makes you can only give that money to certain qualified professionals.
Right.
Mm-hmm. This carrier will allow you to give that to, let's say, your children to take care of you, or one of those visiting angel ladies that come so you can stay in your home longer.
Yeah.
Right.
Well, I can see that. I can see myself buying that, so I can see selling that. So I'm not to the point where I'm ready to say, hey, I'm completely comfortable with this product, but I'm getting real close.
Is the state admitted company?
It's an A+ 15 Fortune 100 company.
Monster.
Yeah, monster company.
Well, you know what? And I counsel constantly with people, and I mean, Dan, we have multiple clients that are need assistance. Either they're in assisted living, or they've got a child living with them, or they've got somebody else living with them, or they've got a service that comes in with 3 different people every day. This old age stuff is expensive as all get out.
That's why it's called the golden years, Joe. You got to give your gold to somebody else.
Give all your gold away. It's the rusty years. So here was something that Greg, this you'll like this one. People ask me, is Greg elder law? And I said, not necessarily is Greg elder law, but there's not a whole bunch to this quote label of elder law.
Right. It depends on what they mean by elder law.
Yeah. I mean, do you take care of old people? Well, of course. Are there exceptions to Medicaid paying? Of course there are. If you're a husband and wife, there are certain things can be done that are 100% legal. One of the things that happens is I've got clients that are taking care of mom, and they're getting paid a stipend rather than what it's really worth. In other words,
when Nancy and I took care of her mom and dad, we got nothing.
I know.
We took care of my dad. I got because the laws were different.
But here comes the situation. What if Dad had $1 million in the bank, and you were taking $50 a day to take care of Dad? Then he died, and all of a sudden, all that money, or he went into a nursing home, you'd have to spend all the money down.
Of course.
For Medicaid.
For Medicaid to come in. But here comes another exception. If you, Dan, were collecting $50 a day, but it's 24 hours a day, you were worth $300 a day. Your family was worth $300. So I've said to clients, I said, hey, go back and pay yourself this money, even though you don't want to. Do it anyway, because Medicaid is going to make you spend it.
Spend it down.
But you are entitled to get a living wage, like a service would do, to take care of somebody 24 hours a day. Is that making sense?
Yeah.
Yeah.
Aren't there other things you can do? Now, here I'm way out of my league, so I'm like the neighbor telling you, all right? Aren't there things that you can do legally over a period of time? Because I thought there was a look-back window where
5 years.
they could go back and say, well, you did this to bankrupt yourself.
Right.
So there's got to be certain things that you need to get professional assistance to say, let's do these things now while you can, because when you get really bad, it'll be too late.
Yeah.
Rarely, though, they think ahead of time.
Can you
that.
help with that, Greg?
Yeah, absolutely.
Why? Okay, why did they do that look back?
To see that you didn't steal money.
But
so
they want
that
your
the-
money.
To become Medicaid eligible.
You knew the answer before you
give
asked.
us
They want your money.
anyway.
The state pays the bill, which means radio station owners are paying the tax to pay the bill.
We know that.
Is it coming back to you now? So well, look at if Medicaid. I had people that were on a special needs trust, same thing on Medicaid, but they had money in the bank, and that money was only to be used for non-essential items,
Like cruises and vacations.
like vacation. So, I mean, literally, this daughter had a car accident.
Wait a minute.
No,
Come
seriously,
on.
I'm not kidding. She had a car accident, got $50,000 in a settlement, but in order for Medicaid to keep paying, she couldn't have the money. So it had to go into a special needs trust.
Vacation trust.
Yeah, and the money could not be used for food, shelter,
man.
clothing. It could only be used for fun. So I said,
Because the government's going to say, hey, you don't need us if you have enough money to eat. We're only paying you to eat and survive.
we're
and
paying you to
stuff."
eat and survive. So I said, okay, take a trip to Vegas and take somebody with you.
Bet it all on black.
Honestly, bet it all. Honestly, it's so stupid, but it's pathetic. That is the rule. And Greg, I know it makes no sense, but listen, it's like being Catholic. Don't ask questions. You just are one.
But Joe, it is terrible that our government forces our elderly to bankrupt themselves
No doubt about
before they help. I hate that.
It's terrible. Well, I got this family right now, and I counseled them twice now, but they're scared. And I said, well, okay, fine. You need to go see an attorney, and the bottom line is you are entitled to compensation for the work you're doing, and if you're not getting it, you better hurry up and take it, because if you wait till 1 month before mom goes in the nursing home and decide to
You
pay
should
yourself
talk
back.
more about that, Greg. A lot of people could use that.
Yeah, it's a big deal.
Like a personal service type contract.
It is. It's a personal service type contract, but literally, if I'm going to hire an agency and pay them $12, $15 an hour, I'm worth the same amount of money.
At
What
least.
makes me not worth it? So
I'd pay you more not to show up.
yeah, my point. Dan would he's undercut you by $1 an hour, Joe.
If you don't show up.
340-1590, 340-1590. It's the Dan and Joe and Greg show. The original Three Musketeers are here for the last 15 years. By the way, there's going to be some press releases I'm writing in the paper about us.
Oh,
pretty soon.
really?
Oh, yeah.
Wow.
Paper?
We're getting big time.
There is a paper?
Press releases, yeah. You do. YouTube.
I saw one in
Yeah, people get it on their,
Saw that
people
in
get
the
it on
museum.
their
I was
phone.
thinking the same
They get it
thing.
on their phone and in their computer. Are we done yet?
Yeah.
Say goodbye, Joe. Goodbye, Joe. Bye, Dan. Bye, Greg.
Bye.
I definitely will have that guy call. He's a nice guy.
You've been listening to the Team MARTEK Hour. The Team MARTEK Hour is a paid program. The content was provided by the advertiser. WPSL, its staff, management, and ownership were not responsible for its content. Investment involves risk. Prior to making any investment, an investor should meet suitability requirements. Past results are not necessarily indicative of future performance. Neither the opinions expressed nor the information provided constitutes a recommendation to purchase or provide investment advice. The material presented is not a substitute for obtaining professional advice from a qualified person or firm. Securities offered through Centaurus Financial, member FINRA and SIPC. Tune in again next Wednesday at 11:05 for the Team MARTEK Hour here on WPSL 1590.